Peter, it's great to see you. It's been a while.
Yeah, I haven't seen you in a while either, Natalie. Although we did have an encounter recently with Charles Payne
That's right.
on Fox Business, and apparently all of your, Bitcoin fans think you kicked my ass. I mean,
Yeah, they
they had
saw the
all these
clear winner.
memes. They showed you like beating me up or whatever. I mean, there was some everybody. I mean, I read all these articles.
Oh
How
yeah.
I got destroyed, how I got killed. I mentioned it on my own podcast as an example of confirmation bias, because all the people who already, have drunk the Bitcoin Kool-Aid and are convinced that, that it's going to the moon, they just assume that I lose every debate and that whoever my opponent is wins. But I think, we could have a real debate here because we only had a few minutes and you were able to, really rattle off some of your talking points pretty quickly. And
Well, well, I can tell you're still licking your wounds. Actually, just for the
I'm
audience
not,
who's
I don't
watching.
have any wounds. But what I'd like to do is have you go over those talking points now so I can really, get into why it's a bunch of nonsense.
Well,
But
I'm looking forward to talking to you about Bitcoin and gold in a little bit. I want to start a little bit with macro. But for those of you who did see our debate, most people don't realize that that was totally impromptu. Peter, you were probably told you're only talking about gold, right? I was told I was coming on to talk about the halving, and then suddenly they surprised us with this ambush debate. So it's good that we're going to have the chance to go over some of those talking points later on. But first,
yeah. And
Peter,
I think that happened. Charles and I were at the same Money Show conference in Miami a couple of days prior. So that's kind of what, put me in his mind. And
okay.
so I just assumed, yeah, we just ran into each other. So he's invited me on the show. He actually wanted me to do the show live from Miami, but I had plans. I was leaving, so I couldn't stay.
Got it.
So I was totally surprised. He didn't even realize that we knew each other. He was like,
I
Peter,
know.
meet Natalie, Natalie, meet Peter. Like, I've never heard of you.
Right. I know. Well, a lot of people love the shows that we've done together. So let's start off, first of all, with just what's happening with the economy, because a lot of the people who follow both of us, we agree on the problem. We agree on the fact that we need hard money again and what they're doing with the economy and interest rates, and blowing up another sovereign debt bubble is the wrong thing to do. So talk to me about what you're seeing right now as far as the economy, whether we're going to hit a cliff and go over it, finally hit maybe a debt spiral collapse, or if you think we're going to manage to do that soft landing that so many analysts in the mainstream world are saying.
Well, you know that I don't think there's going to be a soft landing. I don't even know if it's a landing because if we crash, I don't think that constitutes a landing. But I think the economy is in far worse shape than the conventional wisdom would suggest. Certainly, Wall Street, the Biden administration, the media are spinning the economy into something that it's not. I think the statistics are very misleading, especially if you just accept them at face value. A lot of the statistics that purport to support a strong economy, I think, are going to be revised down. I don't even have any confidence that the numbers are going to hold up. I've been pointing out, and you may recall, that the 2008 Great Recession wasn't called until December of '08, and they said it started in December of '07. So
Mhm.
they went back for an entire year and redid all the data. And the data previously had shown that the economy was good and it was growing and everything was great. And then they went back and said, you know what, all those statistics were wrong. We've actually been in a recession for an entire year. So there is a precedent for doing that. And I wouldn't expect those type of revisions to come until after this election, right? There's no way Biden's going to come out and admit that we've been in a recession for the past year or two. But they may ultimately acknowledge that once, the voters can no longer, react to it. But also, it's not just that the numbers may be revised. I think the numbers as they stand now don't even support that the economy is strong. One of the things that they look at is the job creation, and they point to all these jobs that are being created. But what they don't acknowledge is the quality of the jobs. They're all part time jobs. on balance, full-time jobs are being destroyed. We've lost full-time jobs. And you know that by looking at the household survey rather than the establishment survey. And there are fewer people who have full-time jobs today than who had them several years ago. What's happened is a lot of people now have 2 or 3 jobs.
Right.
And the jobs that are being created are second and third jobs that are going to people who already have jobs. Now, the question is, why are people working second and third jobs? Is that something they want to do, or is that something that they have to do because they can't survive on one job anymore? And I think it's the latter. And so if an economy is so weak, if a labor market is so weak that people are forced to give up their evenings and their weekends and take second and third jobs, is that a sign of strength? No, I think it's a sign of weakness. People would rather not have these jobs, but they have no choice because the cost of living has gone up 30–40% since Biden took office. And that is a huge jump. And so the only way people can pay the rent, put food on the table, keep the lights on, right, pay their insurance, is by taking on additional jobs. Now, another way they're doing it is by tapping into their savings, what's left of the stimulus money they got during COVID. The savings rate has plunged, and credit card debt is at an all-time record high, despite credit card interest rates being at an all-time record high. So would people be running up their credit cards with record high interest rates if they had a choice, if they didn't need to do it? I mean, a real strong economy, people would be paying off their debts. People would be building up their savings.
Coin Stories is brought to you by Bitdeer, where the power of Bitcoin mining is at your fingertips. As a publicly traded leader, Bitdeer's global reach and scale means they're everywhere you need them to be, ensuring you're part of the thriving Bitcoin economy. Bitdeer's not just mining, they are industry pioneers, and Bitdeer stands alone as the only vertically integrated, technology-focused Bitcoin mining company. What does that mean? Well, they're not just deploying, but developing the latest tech to make Bitcoin mining more efficient and effective. With the industry's most experienced leadership team, innovation is in their DNA, and it shows, with a quarter of their workforce dedicated to research and development, pushing the boundaries of what's possible in Bitcoin mining. Now they're leveraging years of expertise in data center and cloud management into high-performance computing through a recently announced partnership with NVIDIA. Join Bitdeer in reshaping the world of Bitcoin mining. Learn more at bitdeer.com and explore how they are pioneering the future today.
And if you look at the government statistics, you've got record high budget deficits, record high trade deficits. This is not a sign of a vibrant, growing economy, but a weak economy that's surviving on debt and imports. But I also think another key measure is the low popularity of Biden and Harris, right? Biden is the most unpopular president since they've taken the polls, right? So I don't know when they started, but he's the lowest. And Kamala Harris is the most unpopular vice president ever. Now, why is she so unpopular? I mean, what has she done? I mean, she hasn't done anything, but the vice presidents don't really do anything. But why are the Biden and Harris so unpopular? Well, the answer is because the economy is lousy and they're getting the blame. And in fact, when you look at the polls, where Biden scores lowest is on the economy. And what's the main problem is inflation. Inflation is robbing people of their purchasing power. And the reason we have so much inflation is because we have so much government. An inflation problem is a government problem because government pays for spending by creating inflation. The central bank helps the government by monetizing debt, quantitative easing, keeping interest rates artificially low to stimulate a demand and consumption. And this is why prices are going up. And these higher prices are a tax, and the average Americans and the poor are feeling that tax bite far more than the rich. And so, maybe Biden still has the support of some of the rich people who have gone wealthy from inflation because they own assets and they don't care if it costs them 40 or 50% more to buy groceries because they don't even pay attention to their grocery bill because it's such a small percentage of what they spend. But people who are clipping coupons because groceries take a big bite out of their paycheck, they're the ones that are feeling this. So the economy is bad, and it's going to get worse. That is the reality, because the inflation problem is going to get bigger. It's not solved. It's not going back down to 2%. It's already headed back up in the other direction. Long-term interest rates are going to be pushed higher by rising inflation, and that's going to compound the problem. And I think it's only a matter of time before a lot of these part-time jobs are eliminated. And we're going to start to see an official increase in the unemployment rate, which is going to be very problematic because now it's going to be stagflation. I mean, I think we're already there, but now the statistics are going to bear that out.
Well, Peter, a lot of people are suffering right now. It really is hitting the working class really hard because inflation has outpaced the ability for people to earn enough money to keep up with it. I just saw a report the other day about how the Dollar Tree's fastest growing customer base is people who earn $125,000, and they can no longer keep their prices at $1. They have to raise their base prices as well as their cap prices, which is just so crazy to think about. You know, people like you and the analysts that I follow within the Bitcoin space, everyone's been saying inflation is going to remain higher. They think they've squashed it, but it's going to remain sticky. And the CBO recently put out that they're going to have to issue $20 trillion more in debt. So to your point about the fact that at some point, you know, you have to pay the piper, and we're going to see more in unemployment. We're going to start going off of that cliff. How are they going to thread the needle in this election year where arguably, to some of your earlier points, they really want to keep things sort of taped together so that they remain in power?
Yeah, I mean, it's not so much that it's just sticky, like, oh, this just little pesky inflation problem is sticking around. It's that the central banks spent over a decade flooding the economy with inflation. We had QE1, QE2, QE3. Interest rates were at zero for more than a decade. And so they really primed the pump. And so over the last couple of years, we're just starting to see the delayed reaction in the pricing structure to all that inflation. And so we've got years and years of catching up to do with respect to the monetary policy mistakes of the past. We haven't even caught up to the mistakes of the present. But the Fed never really moved interest rates into restrictive territory. I mean, it claims it did because it got them up to 5.25, 5.5. But if you look at where rates have averaged, you know, since we went off the gold standard, 1971, rates are lower than average. You just have to throw out the period from the 2008 financial crisis to 2021 when they were ridiculously, unprecedentedly low. But if you compare the rates we have now to the 90s, to the 80s, to the 70s, to the 60s, they're low. They're not high. And if you compare them to the inflation rate, they're not high. But also, if you understand that the way rate hikes are supposed to reduce inflation is by reducing demand. And they do that by increasing the cost of borrowing money. And so there's less money borrowed and less money spent. And it's the reduction in borrowing and spending that takes the upward pressure off prices. But even though the Fed has raised rates, government borrowing has accelerated to record levels, and individual household borrowing has accelerated to record levels. So thus far, the rate hikes have been inadequate to actually fight inflation. What we need are much higher interest rates, but the Fed won't supply them. It's not an accident that the Fed stopped hiking after Silicon Valley Bank, Signature Bank, all these banks failed, right? That was the warning sign. Okay, we've raised rates. We can't keep raising them anymore because we're already causing these bank failures. If we raise them anymore, more of these dominoes are going to drop because the whole banking system is really insolvent because rates were so low for so long. All these banks loaded up on long-term treasuries and mortgage-backed securities that are now underwater. And they'll be even deeper underwater if the Fed keeps raising rates. So in order to stop a financial crisis and subsidize the U.S. government's ability to pay its debts, that's why the Fed stopped hiking. Not because they finished the job of fighting inflation, but because if they kept fighting inflation, they were going to destroy the economy and the financial system in the process. So they backed off. But I think the way we're going to get from here to the election is at some point the Fed is going to come through with some rate cuts. They shouldn't. I mean, they should be hiking rates, but they won't. But I do think the economic data is going to soften between now and the election. And that will provide the cover for the Fed. Because if the unemployment numbers pick up, if the job creation slows down or turns negative, the Fed can claim that this justifies the cuts, because they'll also say that this weakness in the economy and the labor market is going to bring down the inflation rate in the future. So even if inflation is still 4 or 5%, maybe the way they measure it, if they get a weakening economy, they can say, look, we know inflation is still above 2% now, but we have confidence it's going to go down because of the weakness in the labor market and the economy. And so therefore, we can turn our attention now to the economy and labor market. And you know, we don't have to worry about inflation anymore because that problem is solved. But what they don't realize, or they don't want to admit, is the next recession is going to exacerbate the inflation problem, because the next recession is going to take these enormous budget deficits and make them even bigger. And so even more money is going to have to be printed to finance it. And that's going to put tremendous downward pressure on the dollar, which we haven't even seen yet. And then that's going to put even more upward pressure on consumer prices. So it's going to be an inflationary recession, stagflation, inflationary depression, however you want to define it. But it's not going to be like any of the economic environments that we've been in since the 1970s, except this time it's going to be much worse than the 1970s.
Right. We basically have kicked the can down the road. We don't allow the fever to do its work, which would be the higher interest rates, to cleanse what we need to cleanse in terms of the malinvestments and what we've built up in this bubble. But we are addicted to that money printer. And you've talked about that as well. We have to print in order to keep the system afloat. And so arguably the next time they really go to print, they're going to have to do unprecedented things. They're going to have to inject trillions and trillions of dollars for things to remain solvent. So is there any, I mean, is there an ability to kind of turn the car around from the cliff that we're heading toward, or is it too late and people need to flee to safe haven assets?
No, I mean, it's like you develop a drug habit, and the longer you do a drug, the more of the drug you need, because your body builds up a tolerance. And, you know, eventually, if you want to stop taking the drug, the more critical it is to you, the more your body has grown dependent on it and needs it, the harder it is to kick the habit, right? The bigger the withdrawal is going to be. And so every time we decide that we're just going to take more drugs because we don't want to go through the withdrawal, we just make the ultimate decision to kick the habit that much more difficult, because it'll be more painful. Now, the alternative is you just keep taking more and more drugs until you die of an overdose. And I think that's where we're headed as an economy. I think we're going to overdose on inflation, because inflation has been the drug that the Fed has used every time the economy turns south, which obviously it's going to do again if it hasn't already done that. But meanwhile, because of all this, we're now spending over $1 trillion a year just on interest on the debt. And if rates just stay where they are, sometime next year, we'll be spending more than $2 trillion on interest on the national debt. Not rate hikes, just if they stay where they are. And so right now, interest is the third biggest line item in the budget. It's more than defense. But by the end of next year, 2025, if rates stay where they are, it'll be the biggest line item. The U.S. government will be spending more paying interest to bondholders than it does making Social Security payments or Medicare payments. Just imagine that as the biggest government expenditure. And of course, it doesn't stop there, because if this continues for another few years, that interest expense keeps growing to the point where before the end of this decade, the U.S. government will be spending 100% of what it collects in taxes just paying interest on the national debt. Now, obviously, we can't get to that point. There's no way the bond market, the currency market, is going to allow the U.S. government to get to the position where all of the tax revenue goes to paying interest on the debt, right? And we have no money for anything, right? Not even to pay the people to send out the checks to the bondholders. Or we won't have any money. That means that the government would have to borrow 100% of the defense budget, Social Security, Medicare, everything. So sometime between now and then, this thing has to collapse. The question is, when, right? Do we have the crisis this year? Do we have it next year? Do we have it in 2026? But every year we don't have it, the odds of it happening the next year grow up.
Well, I'm in the camp that I believe that they have one more massive print in them left before the bond market just completely goes into dysfunction. But this is one of the reasons why a lot of people are moving to assets like gold and Bitcoin. So let's talk about gold for a moment. I was surprised by one of the statistics that talked about Costco. People are just flooding the Costco stores and purchasing gold bars. Gold recently hit an all-time high. You talked about it recently on Fox. So, tell me about why the shift now in terms of people actually purchasing more gold, including the central banks, and why it took so long after they've been raising interest rates.
Yeah, well, first of all, the Costco story is kind of overhyped to kind of indicate that this is some kind of mania, that this is the sign of a top because people are going to Costco and buying gold. Costco is just one store. It's not like they got gold being sold, in all the stores, right? It's just Costco, right?
Mm-hmm.
And I think they limit it to like maybe 3 ounces of purchase. So this is not that significant, but it's an indication of the beginning of a trend that people who didn't buy any gold at all are now starting to nibble. And so I don't think this means that, this is one of these, hey, even the taxi cab driver is buying gold, it's time to get out. This is early days of the public. And in fact, if you look at real public demand, right, look at the ETF GLD, Americans have been net sellers. So the whole time gold rallied from 2000 to 2400, which was a 20% move in under 4 months. That's a huge move for gold. I mean, maybe not for Bitcoin, but that's a big move for something like gold. And especially with the market cap. I mean, because gold has a much bigger market cap. So gold moving up 20% is like Bitcoin quadrupling or something like that. I mean, there's a lot of market cap there.
Sure.
So despite the fact that gold moved up 20%, retailers were selling the whole time. They kept liquidating their gold holdings. And I have my backdrop up for SchiffGold. That's my gold business. And, we're pretty good, taking the pulse of the market. And, we talk to the wholesalers that we buy from, and they sell to our competitors as well as us. And business has not really picked up much. It's a little bit better, but not significantly better. So it's not like all of a sudden the public has got gold fever and they're rushing to buy. They're not. The buyers have been foreign. And a lot of it is central banks, Eastern central banks, emerging market central banks that have been the big buyers of gold. And that's why it keeps going up, even though a lot of retail has been selling and the institutions have been missing in action. In fact, just a few months ago, before the huge run up, the big Wall Street firms were downgrading the gold mining stocks because they saw no upside in gold just before it took off. And so the question is, why are these central banks buying gold? Because, they could be buying dollars and holding U.S. treasuries and getting 5%. But why are they turning that down and owning gold and getting 0%? And I think it's because they can read the writing on the wall. They don't have confidence in the fiscal responsibility of Congress or the ability of the Fed to fight inflation. And they're voting with their feet. They're selling their dollar assets and they're increasing their gold reserves. And I think this trend is going to continue. This is the de-dollarization. And central banks are moving out of dollars and also to a lesser extent out of euros, out of yen and pounds. And they're moving more into real money. They want to back up their own currencies with money rather than another fiat currency that's backed by nothing. So this
Right.
is the beginning, I think, of that trend. It's got a long way to play out because the central banks
Yeah.
still way under own gold, especially the central banks that have been buying. The Western central banks have much greater gold reserves as a percentage of total reserves than emerging markets. But the
Right.
emerging markets have all the reserves. They have much more in the way of foreign exchange reserves than the big countries. And so this is a major shift. And, it's unfortunate because you've got so many Americans who have been buying Bitcoin or these Bitcoin ETFs, and they're selling their gold in order to do it. And so you have the Eastern central banks taking advantage of this. They're buying the gold that Americans are selling. And this is a negative development because it's basically a flow of wealth leaving the U.S., going to China, going to India, or wherever the gold is being bought. And Americans are just stuck with nothing.
Well, Peter, I talked about some of these topics with Andy Schectman of Miles Franklin. I have a link in the show notes for everyone. We talked about central banks buying gold and de-dollarization. One thing that he said that I'd love to get your thoughts on is he said that the price of gold has been suppressed and that has actually been benefiting these central banks to be able to acquire more before the price really takes off. Do you agree with that? And how do you think that's working?
Well, I mean, it's not suppressed by some kind of grand conspiracy. I think it's suppressed simply because enough people in the private sector don't recognize its true value because they still have confidence in central banks. They still believe that inflation is not a threat, that the Fed has extinguished it, and they would rather invest in growth stocks. It's like there's an opportunity cost to having your money in gold. I mean, I can't have it in a Magnificent Seven. And so people are still very risk seeking. They don't have a lot of fear or concern about inflation or a debt crisis. I mean, we've gone on for so many years, supposedly, and nothing as bad has happened, even though a lot of bad things have happened along the way. They just don't recognize it or know to what to attribute it. But yeah, you don't have the type of demand that we should have from investors for gold.
Mm-hmm.
Certainly the institutions should be buying gold. Pension funds, endowments, hedge funds should own some gold. I mean, they shouldn't be all in gold, but they should have 5% in gold. I mean, they have nothing in gold. And the same thing for most individual investors have no gold, right? I mean, they should have some gold. And if a lot of the people who have no gold decided they wanted to buy a little bit of gold, that would send the price up a lot.
What percent do you have in gold?
Well, I have a lot, but it's mainly because I own gold mining stocks. I mean, I own physical gold and silver, but I have half my portfolio, I don't include the gold and silver in my portfolio. I look at my gold and silver as savings. Like instead of money in the bank, I look at it, gold in a vault, right? So that's kind of my safe haven money, my savings. But I own a lot. I have 50% of my investment portfolio is in precious metals mining stocks. And so indirectly, when you own a gold mining stock, you own the gold that's in the ground that hasn't been mined yet. And so some of that gold belongs to me as a shareholder, and it's going to be mined in the future and sold at what I believe is going to be a much higher price. And in fact, I think that gold mining stocks have been an ironic victim of inflation because inflation has driven up the cost of mining dramatically over the last decade. It's so much more expensive now to mine an ounce of gold than it was because the costs have gone up so much because of inflation. The raw materials, the labor, everything. But because investors don't appreciate how bad the inflation problem is, they haven't bid gold up, commensurate with the cost of mining it. And so that has bitten into the profits of these gold mining companies.
It's time for a quick break to hear these messages from my partners who make this podcast possible. First up, Bitcoin 2024, the world's largest Bitcoin conference, is coming to Nashville this July. Join us for 3 amazing days of keynotes, panels, networking events, workshops, concerts, and my 3rd annual Women of Bitcoin brunch. The Bitcoin conference is actually where I launched my podcast almost 3 years ago. You never know what can happen or who you can meet here. Head to b.tc/conference and use the code HODL, HODL, for 10% off. And finally, the why of Bitcoin is easy to grasp, but the how can be so confusing. The Bitcoin Way is your professional Bitcoin IT and security team that offers personalized one-on-one support to guide you through cold storage, setting up a node, inheritance planning, privacy best practices, and more. Don't take my word for it. Take 82-year-old customer Bill's.
Give the Bitcoin Way a try. You will be well on your way to owning and protecting the greatest money ever discovered.
Set up your free 30-minute consultation with the Bitcoin Way today. All right, back to the show.
But what I think is going to change over the next several years to decade is gold is going to outpace the cost of mining it. And so the margins are going to explode for these gold mining companies. And what's going to really cause the big gains is that a lot of the gold that the market is assigning no value to is going to suddenly have tremendous value. For instance, if an analyst that works at a Wall Street firm has a long-term forecast and thinks that the price of gold 10 years from now is going to be 1,700, which is what they generally think, right? Because they always think price is going down. But the cost of mining is going to keep going up. You know, you're not going to have a big earnings estimate. But let's say a gold company has a major deposit of gold, but it costs $2,000 an ounce to get it out of the ground. Well, if Wall Street is assigning a $1,700 gold price, then that asset has no value. The mine is, you know, they're never going to extract the gold because they would lose money on every ounce. And so, you know, losing money on every sale may be good business if you're a tech stock and no one gives a damn. But if you're a real business, losses aren't good. But let's say all of a sudden the gold price is 5,000, and maybe the cost goes up from $2,000 an ounce, maybe even to 3,000, right? But if gold can be sold for 5,000 an ounce and it costs you $3,000 to get out of the ground, that's a very valuable asset because the company is going to earn $2,000 for every ounce they mine. And so now something that had no value on the balance sheet could have billions, depending on how much gold they could extract at $2,000 an ounce profit. So I think a lot of these stocks are just going to just explode. And that's why I have such a big percentage of my portfolio. Now, of course, I've been waiting this out for a long time, right? It's not like I just started buying these stocks. I've been buying them for over a decade. And so I've been buying more when the prices were down. And then whenever the prices really rally, I stop buying and I buy other stocks, right? Because I try to keep it at about a 50-50 between precious metals and more traditional dividend-paying value type stocks that have nothing to do with gold and silver. But I think to the extent that you've got, you know, your audience and they're risk-seeking and, you know, they're gambling on Bitcoin, personally, if you want to gamble, if you want to make the moonshot, right? If you want to buy the Lambo and make 10 times, 20 times, 50 times your money, the odds of doing that in Bitcoin are extremely remote. Whereas the decline, the possibility of a 70, 80, 90% decline in Bitcoin, I think is real, pretty substantial. So I don't see that the risk, that the reward is worth the risk. Whereas with gold mining stocks, can you lose half your money in gold mining stocks? Yes, you could. I think the odds, though, are less that you'll lose half your money in gold stocks than you'll lose half your money in Bitcoin. But on the other hand, I think gold stocks have a much better chance of going 10x, 20x, even 3x than Bitcoin does. So that's where your money should be if you want to gamble, right? If you want a risky investment that can make you a lot of money, you should look at the gold mining stocks. I just happen to manage a fund, the Euro Pacific Gold Fund, although Adrian Day manages it for me. But anybody can buy it no load at any of the discount brokerage firms, or they can contact Euro Pacific Asset Management and buy it. Or you can, you know, pick your own gold stocks or buy someone else's fund. But I think that that's where you should be with your risk capital. If you want to play it safe, you want a safe haven, which Bitcoin clearly is not, right? I mean, look what happened on Thursday night last week when Israel, retaliated against Iran, and the S&P went down 1.5% immediately. Bitcoin went down 6%. Bitcoin went down more. Gold went up 1.5% and hit a record high. Gold's a safe haven. Bitcoin is not. And so if you're looking for just a safe place to store your wealth, then buy physical gold. If you're looking for a speculative way to increase your wealth, look at the mining stocks. But under no circumstances should you look at Bitcoin.
Well, you mentioned earlier opportunity cost, and I'll just share with the viewers very transparently. I used to be more diversified into precious metals, into gold, and they've underperformed Bitcoin. And I wish that I had placed some of that money into Bitcoin so that I could see the tremendous upside that Bitcoin has
Well,
experienced in the
Natalie,
last couple of years. So do you ever look at, I mean, whether it's Bitcoin or even some of the tech stocks, do you ever feel like you really missed out on better investments? Whereas gold, yes, maybe it preserved your wealth and your purchasing power, but it didn't increase it by as much as other assets.
well, hindsight is always 2020. So you can always go back and look at the things that you should have bought after you already knew what happened to them, right? So, but you have to make decisions in real time. And so when you're doing that, I think my decision not to buy Bitcoin was a prudent decision. Now, with the benefit of hindsight, yes, I would have made a lot more money had I bought Bitcoin 10 years ago, 20. But had I bought it 3 years ago, I would be worse off. People aren't talking about this, but Bitcoin today is over 20% below where it was 3 years ago, priced in gold. So if you bought gold 3 years ago, you've got more money than if you bought Bitcoin. And with a lot less volatility too, as a matter of fact. I mean, you didn't have nearly as big a collapse. I mean, somebody who bought Bitcoin 3 years ago might have sold out at a huge loss because there was a big drop, but you didn't have that kind of volatility in gold. And even though Bitcoin right now, you had all these ETFs that came in and all this Bitcoin was bought, Bitcoin is only around 66,000. That's near the highs, but it's still below the 69,000 peak in dollars from 2021. So we haven't been able to blow through the highs despite all this ETF buying. What you have to ask yourself is what's going to happen when the ETF starts selling, because the ETF buying bid it up. Well, it's going to go down even faster when the ETF buyers become sellers. And that is going to happen. The people who bought these ETFs are normal traders who took a shot because of all the hype and all the advertising, all these big discount brokers. Hey, we got these ETFs, we got this stuff, BlackRock, Fidelity, all these guys. And so some people just took a shot. Yeah, let me buy it, right? I mean, just like they buy any kind of hot IPO or something, people get, excited about it. They want to try to make some money. They don't even really understand, what you're talking about. And the reason that you and a lot of, your audience is in Bitcoin. This is a whole new audience. Now, there could be a few people, that, maybe that bought some that were already true believers, but, they had an IRA and it was like, all right, I can buy them my IRA now. But most of it is new money. People never bought any Bitcoin in their lives, are just buying it for the first time. So they don't have experience with the boom busts. They just have experience with the stock market. They bought these ETFs. A lot of people who bought the ETFs actually sold the gold ETFs to get the money, or they sold some gold stocks to get in these ETFs. But they're not hodlers. They're not, dime in hands, take my Bitcoin to the grave.
I think they will be.
I don't think they will be. There's no reason to think they will be. I think they're going to treat these stocks the way they treat anything else. I think if they go down 20, 30%, they're out, right?
Well,
they're going to say, no mas, I'm gonna move on and try something else that didn't work.
Well, to your earlier point, Peter, about gold outperforming over the last 3 years, I do want to bring up a chart because sometimes we can't just cherry pick certain time frames. Bitcoin has outperformed gold in the last 3 months, the last 6 months, the last year, 2 years. You're right on. If you look at 3 years, gold outperformed in the 3-year time frame, but then year 4, 5, 6, 7, all Bitcoin, not gold.
Yeah, because you're talking about the early days of the Bitcoin bubble when Bitcoin outperformed everything. I mean, so it's not like to say, oh, it outperformed gold. It outperformed every asset there is. So it's got nothing to do with gold. But my point is that I think the whole mania has topped out. And as of now,
we're not going to 100. We're not going to 100, Peter.
Probably not. Probably not. It could happen. But I would say if it was going to go to 100, it would have already gone there. you got to ask yourself, why is Bitcoin almost 30% down priced in gold from where it was at its peak? Why did it lose so much value relative to gold? If it's so much better than gold, if it's the fastest horse in the race, right? Gold 2.0, why is it losing? It's in a bear market. Despite all the hype, all the advertising dollars, all this Wall Street money pushing people in to Bitcoin, it's still in a bear market in terms of gold. Nobody on Wall Street is pushing gold. I mean, it's all crypto. I mean, you go on, look at these financial. We were on Fox Business, or you look at CNBC. They talk crypto nonstop. They barely even mention gold. Yet gold is still beating Bitcoin, over that particular time frame. And I think it's probably going to continue. So I think 2 years from now, gold will be beating Bitcoin for 5 years.
Wow.
And another 5 years, it'll be beating it over 10. But, yes, if you go back 20 years, sure. If you start when Bitcoin was a penny, it'll always be beating gold. I mean, even if in 10 years, Bitcoin is $100, you could still argue that since inception, it beat gold, because gold would have to be up, 1,000 times to, because gold didn't start at a penny. So if you go back long enough, you're always going to see. And I think that the Bitcoin promoters are going to be sticking to this, going back. There's that song, "What Have You Done For Me Lately?" Bitcoin hasn't done much for you lately.
It's up only 100% on the year.
Gold.
It's only up 100% on the year, but it's done nothing.
No, but that's because it sold off a lot before the year started.
Okay, Peter, I really want to talk about something that you brought up during the Fox Business debate that we had. One of the reasons that I think we got to a place where we have all of this, we don't have capitalism. I think we have creditism, right? We just issue more and more credit, and we paper over everything, and we are just in an empire of debt at this point. And one of the reasons I think we got to this point is because gold does have defects, and it's prone to centralization. It's very physical. It gets centralized in vaults and reserves, and then people paper on top of it, and they fractionally reserve bank, and they rehypothecate, and that's led to some of the issues. And you on Fox, when you responded to me, you said, well, it's human nature. It's not gold that's the problem, it's human nature. But we can't fix human nature. I mean, we can't just return to the gold standard and hope that humans will no longer be greedy and incentivized by profit and rent seeking. So my question to you is, what is your answer to that? Because Bitcoin creates a new system of incentives that essentially kind of rewards positively a system where we're greedy, but it ultimately helps everyone in the network.
Well, gold didn't work for so long because it has defects. It's worked for thousands of years because it's the best monetary system we've had. And yes, humans have defects. Democracy, by its nature, is a defective form of government. That's why the founding fathers created America to be a republic. And to the extent that we held true to our Republican roots, we were able to preserve a better gold standard than the monetary system we have now. But yes, from time to time, you're going to have episodes where gold takes a back seat, and you have these experiments in paper money and fiat money and booms and busts. And there's no doubt in my mind that this period will end, and we could return to hopefully a long period of more of a gold standard again. That will, impose the type of fiscal and monetary discipline that the politicians don't want, but that the people need. You mentioned on Fox Business that Bitcoin was the people's money. Mm-hmm. Gold and silver, they're the people's money. The people created money. Government didn't say gold and silver is going to be money. The reason governments adopted gold and silver as money is because that's what the people were using. That's what the people wanted. So when the kings wanted to pay their soldiers, they needed to pay the soldiers in money that the soldiers could use to buy food. And, so that was gold and silver. So all they did is they coined it. They took the gold and silver and they made coins out of it. Now, what governments eventually found out is, we could debase the coins. Yep. We could take these gold coins and stick some copper in there and nobody will know, right? And then we can create inflation, and we can rob people the value that they think they're getting. And that was kind of the beginning of it.
Right.
It became much easier once they had paper money.
Exactly.
Because initially paper money was backed by gold. And then the politicians realized, hey, we can print a bunch of money and just pretend it's backed by gold, right? But this is not a flaw of gold. This is a flaw of humans. But you don't eliminate that flaw by going to Bitcoin, because Bitcoin is completely flawed from the beginning, because it doesn't have any substance. It doesn't have any value. There's nothing there. It's just a digital string of numbers that has a price. It has a price because people want to buy it. But it doesn't have any underlying value to support that price, other than the belief that the price is going to go up, because more people who don't care it doesn't have any value, or who don't know it doesn't have any value, are going to be willing to buy it. And so you can't base a monetary system on hype, on a Ponzi, on a pyramid. I mean, it's literally a blockchain letter is what it is. And I agree with you. There are people who are hoping. You said, Bitcoin gives you hope. It gives you false hope. There are a lot of people who think they're going to get rich. They hope they're going to get rich because the only shot they have is to gamble on Bitcoin, because they don't see any real path to wealth. So they figure, I'll just take a shortcut. I'll buy this Bitcoin and hodl till the moon. But it's not going to happen. They're going to be disappointed. The people who have put their faith in Bitcoin are going to lose. Now, there are people who made a lot of money in Bitcoin. Right? I know a lot of those people. They got in a long time ago. And the reason they made a lot of money is because they've sold a lot of their Bitcoin. Now, they might not have sold it all, but they've been net sellers over the past few years, right? They've been taking their Bitcoin and gradually selling them and buying other assets.
Well, Peter, we live in a world of electronic ledgers, right? That's how we all communicate value right now in all sorts of different currencies. The US dollar currently being the most powerful. We send that that monetary information across the globe. It does not settle, obviously, instantly. And I would think that you probably imagine that your children and your children's children will live in a world of digital money in some format. So wouldn't you want them to have a form of money that no one can control and manipulate, and that it's a ledger owned by everyone, as opposed to a centralized ledger, which, whether it's a physical gold or not, it ultimately becomes controlled by very few people?
I don't even look at Bitcoin as money, because it doesn't meet the basic definition of money as the most marketable commodity, because it's not a commodity. At best, it's a currency. At best, but it's not really a currency because no one uses it as a currency. But if it's a currency, it's a fiat currency, because it derives its value from faith, from the belief that people have that it's going to have value. I was looking at the interview that you put up on your website, and it got a lot of views. And I was looking at some of the comments, and I noticed, like, one of the comments that somebody made, about why I don't get, like, why doesn't Peter get Bitcoin? What is it understand? They can't figure out why I don't get it. I mean, I do get it. I just don't believe what they believe. But he said, look, Bitcoin is just a digital version of gold. Gold's analog, Bitcoin is digital.
Yes.
And his comparison was photography. He said, at one point you had a camera and you had film and you had to develop it. And now we have digital cameras. And so going to digital gold is the same thing. It's not the same thing. It's completely different, because when I take a digital photograph, I still get a photograph, right? It's just a different form of photograph, but I still have a photo of my kids. I can email that photo to their grandma, who can have a photo. I can put it in an album. I can look at it. It preserves a memory. So
You're turning it digital. You just said you'll email it. That's a digital version.
But a digital photo
digital, not the
is,
analog
let me
anymore.
finish the analogy. A digital photo is still a photo. I get the same utility from a digital photo. Now, digital gold is not gold any more than digital food is food. You can't have a diet of digital food. You will starve. Digital gold does not give me gold. This is a bracelet I got. That's a new bracelet, but it's gold. It's 4 ounces of gold. It's made by Monet.
Very nice. Very nice.
But you can't make a bracelet out of Bitcoin. It won't work. Now, you can't conduct electricity with Bitcoin. You waste a lot of electricity creating a Bitcoin, but you can't unleash that energy in the future. You can't conduct it. Gold is a great conductor of electricity. It has a lot of other properties that are very unique to gold. Gold is the most useful metal on the periodic table. And it would be used for even more things if it wasn't so expensive. And it's so expensive because it's very scarce.
Well, I mean,
And so digital gold is not gold. It doesn't work. It's not the same thing as digital photography.
well, I mean, the vast majority of gold's price comes from its monetary premium, which same goes for Bitcoin. I mean, central banks are not buying up all this gold because they can use it for industrial purposes or to make bracelets like the one on your wrist.
Right. But Natalie, they're buying that gold only because in the future, maybe 100 years or 1,000 years in the future, that's exactly what can be done with it. When you're buying gold, you're storing all the future use of that gold right now in the present. It is a real commodity, right? The reason you can't do that with other commodities is they decay, they rot, right? Gold doesn't lose its properties over time, so all the value of that metal, you can store it, right? But Bitcoin doesn't have any value to store. It has a price, but price and value are two completely separate things.
Wow.
So it's Bitcoin isn't a store of value. It's not a safe haven. We know that from the way it trades. So it's got nothing in common with gold. So why is it digital gold? It's not. I mean, you could say it's digital fool's gold. I'll give you that. But it's not digital gold.
Okay, well, Peter, as we start to wrap up, because we are running out of time, I do want to talk to you about intrinsic value because you are a student of Austrian economics, just like me. It's one of the reasons why I've enjoyed following a lot of your work. And in Ludwig von Mises's book, Human Action, this is what he says about intrinsic value, and I want to get your take on it. Mm-hmm. Value is the importance that acting man attaches to ultimate ends. Only to ultimate ends is primary and original value assigned. Means are valued derivatively according to their serviceableness in contributing to the attainment of ultimate ends. Their valuation is derived from the valuation of the respective ends. They are important for man only as far as they make it possible for him to attain some ends. Value is not intrinsic. It is not in things. It is within us. It is the way in which man reacts to the conditions of his environment.
Yes, and there's nothing in that quote that would support Bitcoin or undermine gold. He's just saying that the value is not in the object, right?
In the gold.
But it's like beauty is in the eye of the beholder, right?
And so is value, I guess.
No, but that actual value, what you could do with it, the fact that Bitcoin has, that gold has all these uses, you can't question that. All the things that gold is used for are objectively true. Now, the value that any individual wants to place on all that utility, sure, one person can value gold more than somebody else. Let's take a look. Let's say, a steak. What's the value of a steak to a vegetarian? Well, it's not worth anything, right? Because she's not going to eat it, right? So there's no value there. But you'd have to argue that, well, even though that vegetarian doesn't value that steak, somebody will value it because not everybody is a vegetarian. Somebody can eat that steak and get enjoyment out of it, even if to the vegetarian, the steak is worthless, right? Because they don't eat meat. But so with Bitcoin, there's no value for anybody. There's nothing anybody can do with it. Nobody can eat it. It's nothing. So I think if Mises were here, he would be right with me in the gold Bitcoin debate. I don't think he would be buying into all the Bitcoin hype. I think he would be in favor of real sound money. Bitcoin is not sound money. It's not even close to sound money. Just ironically, the reason we call it sound money is when you drop gold on a counter, it makes a sound. That's where Bitcoin doesn't make any sound. Hard money means if you drop it, it hurts. It's hard. It's not soft. Bitcoin is neither hard nor soft because it's nothing. It's just numbers. That's all it is. And the thing is, Bitcoin has already failed as a currency because it's too expensive to use, too slow. Nobody uses it as a currency. Everybody then reinvented it as digital gold. But as I said, it's not digital gold. It can't be. It doesn't have any of the properties of gold.
No,
so all I got to tell you,
those things are not true. If
Natalie,
you travel the world, a lot of people are using it, especially as a hedge to far worse inflation, or to use it as a peer-to-peer network for commerce. And
are you doing anything, Natalie? What if you're wrong? I mean, could you entertain the possibility that you might be wrong about Bitcoin and maybe I'm right and it's going to collapse one day? Is that even possible that I'm right?
Do you entertain the same thought that you could be wrong
No,
about Bitcoin?
I think there's a remote chance, but let me put it this way. Let's say I
Oh.
am wrong, okay, and Bitcoin goes way up. I don't care. It's not gonna affect me, right? I
Well,
mean,
you'll miss out on a lot of
but there are a lot of things I've missed out on in my life. You can't catch everything. But I've got enough wealth that, people, I get a kick when people go on and say, have fun staying poor, like I'm poor, right? No matter what happens to Bitcoin, I'm not going to be poor, right? And
Well,
so,
I'm
but
very happy for
my
you,
point
Peter.
is
We
for
we all
you,
want you on Team Bitcoin. We really do.
but
And do you ever think about the fact that if you were to say one day, I mean, you got to know that if you were to wake up one day and tweet, I bought Bitcoin, I believe in it, how many millions of
yeah,
people
I
would
did that.
flood
I
to be
did that
your
once. It was an April Fool's joke, and then of course
but
people
they
try to
knew.
act like I was sincere. No, but I'm trying to ask you a question, right? What are you doing? Because if you're wrong and you got everything in Bitcoin, you're broke, right? And in fact, here's what I find also, I think is, a double standard and an example of confirmation bias. When I was reading all of the comments on the YouTube, so many people were saying, well, of course Peter Schiff is against Bitcoin because he's a gold salesman. He sells gold, right? Well, I didn't always sell gold. I didn't even start selling gold until 2011, but I was recommending it 10 years earlier. So even when I wasn't involved in gold, I told people to go buy it from other sources. So I only started selling gold because the people I was recommending to buy gold were getting ripped off by these unscrupulous gold dealers that were pushing them into numismatics. So I only started my gold company so that the people who were buying gold off of my recommendation wouldn't get ripped off. That's where it started. But the bigger point is, so everybody wants to say that I'm biased, that you can't trust what I say about Bitcoin because I sell gold. Yet nobody wants to acknowledge your bias, whether you know you have it or not. Your entire life is now based on Bitcoin. It's not just that your money is in Bitcoin, your business, your personality. You're 100% vested in the success of Bitcoin. So how can you be objective? Right?
Well,
When you
Peter,
have so much riding on the success of Bitcoin, you cognitively you can't even accept that I'm right.
Well, Peter, I have a very candid response to that. I come from a background of journalism where I used to pitch stories on things like Bitcoin and the economic situation that we find ourselves in. And what was very difficult for me was I was starting to learn about Bitcoin, but the way that I had to report on it was basically in order to make a neutral story, I had to have one or two people that said something great about Bitcoin and one or two people that said something bad. And then here you go, let the audience decide. And as I learned more about Bitcoin, I felt like I was doing a great disservice because some of the people who were saying negative things were absolutely wrong about it.
Well,
And
in your opinion, they were wrong.
I didn't want to put that information out there. And so I have made a choice. I made a conscious choice to leave my previous career because I believe so much that this is our best chance for solving the biggest issue, which I think we face. And
Yes, and
the fact that
I have no doubt.
we have inflation and people cannot save for the future. I don't think that gold has no merit at all. I just think it's not for the digital economy of the future. I think that gold will perform well, but Bitcoin will outperform it. And yes, I started with a small allocation, then I grew in my knowledge and my allocation grew. And now I'm at a point where more than 50% of my wealth is in Bitcoin because I feel comfortable enough and I can sit through the short-term volatility knowing that this is the best chance for me to preserve wealth down the road, not just for myself, Peter, but for the people I care about and for hopefully my
Yeah,
descendants. This isn't
Natalie,
just
first
about
of
me.
all,
So yes, I am biased, but I'm biased for a reason because I've done my homework.
yeah, well, first of all, I applaud the fact that when you were a journalist, you felt compelled to give people both sides. That doesn't happen today. Like on CNBC, there's rarely a negative voice heard about Bitcoin. It's all bulls and no bears. So and I think that's because their advertisers are all crypto and they don't want to piss them off. But I have no doubt, Natalie, that you are 100% sincere in what you're saying. I don't get any sense from you that you are not being 100% honest. The point is that sometimes your judgment can be clouded by your own perception or biases and your own worldview, which, to accept that you're wrong would be so, so earth-shattering that you almost want to tune out anything that would suggest it. It's subconscious. It's not something that you do. Now, you can accuse me of doing the same thing. I mean, I'm not saying that it couldn't be the other way, but your people, that's my point, is the people that are following you, they can't accept the fact that I'm being honest, that I don't have an ulterior agenda, that I just believe what I believe because that's what I believe. And you believe it because of that. For the same reason. They think that no, I don't really believe what I'm saying about Bitcoin. I must be lying. I'm just trying to sell gold. And a lot of people think I secretly own all this Bitcoin. I don't. It's not a secret. I don't own any. I mean, if I owned it, yeah, I'd say it. I owned it, but I don't. It's not a secret. I'm honest about my not owning Bitcoin. I'm honest about the fact that I've never bought Bitcoin. I had some for a little while, but they were given to me, and then I lost them, so I don't have them anymore. But and I've admitted that, yes, do I regret not buying it when I first learned about it? Of course. I mean, what idiot wouldn't regret it? In fact, everybody who bought Bitcoin, in 2010 regrets that they didn't buy more. I mean, you'd have to be a moron, right? Because look at what happened, right? As I said earlier, hindsight is 20/20.
Right.
So sure, could I have been a billionaire had I bought Bitcoin when I first heard about it? Yes, I would be a billionaire. I think I'll be a billionaire eventually anyway without Bitcoin, but yeah, I would have got there a lot quicker had I taken that shortcut. So sure, yeah, I regret that. But people think, oh, that doesn't mean anything. It just means that I'm honest. I'm always honest about what I say. And it's not that I haven't done my homework or haven't researched it. I've done my homework. I've researched it. I've just come to a different conclusion than you have. And so the people who like Bitcoin have to recognize it. It's not that I just don't know it. I haven't taken the time to do my homework, or I'm biased. I've done all my homework. I'm not biased. I just have an honest opinion that is different from the people who support what you're saying and believe that Bitcoin really is the solution to this problem, that it really will work as money, and that it is going to a million or whatever. There are people who honestly believe that, and then there's people like me who honestly believe that's a fairy tale and it's not going to happen.
Well, I understand that we have different views. I respect yours. I really do enjoy following your work, especially with regards to your macro analysis. We agree on the problem. We agree on the causes of the problem. We disagree on the solution, and that's okay. I still believe in the future you will one day tweet that you're buying Bitcoin. Anything else just to close up? Anything you want to leave the audience with?
Again, just everybody be open-minded, and you keep, follow me on my social media. I mean, even if you disagree with me on Bitcoin, you can agree with me on a lot of other things that have led you to buy Bitcoin. Yes. Unfortunately, for a lot of people, the road to Bitcoin went through me. And I feel, a little bad about that, if I'm going to be responsible for their losses. But also remember, if you're right, Natalie, that Bitcoin is going to go as high as you think, you don't need to own that much of it. Just hedge your bets, just in case it doesn't do that. A lot of people end up getting disappointed in life. I mean, things that you think are going to happen don't turn out the way you plan. So have a contingency. Don't make an all or nothing bet on a potential long shot that could go way up. It's like, would you put all your money into one lottery ticket? Of course not, right? Because you'll probably lose. Now, maybe you don't think Bitcoin is quite as risky as a lottery ticket, right, but there is risk there, right? It's not, that there's no risk. And you've seen Bitcoin go down many times in the past by big amounts.
That's very true.
And there's no guarantee that the next time it goes down, it's going to come back up, right? It may not. But if it does, you can always buy some more then, right? You can, it's not like you can't sell, and then if it drops a lot, you can buy it back, So just be, careful, be prudent, and take some of your winnings off the table, because right now, most people at this price should have winnings, I would imagine.
Almost everyone, yeah. Yeah.
So pare down your bets and do something stable, whether it's buying gold or investing in dividend-paying stocks, some real estate, buy something else. Don't just hodl it all and just, keep it all on, on Black 24 and just hope that's the number that comes up. Just do something. And what's the worst case scenario? Okay, so you make a little bit less money when Bitcoin goes up, but you're still rich, right? But the best case scenario, or best case, but if Bitcoin crashes, at least you're not broke. At least you've got something else that maybe made a good return.
Well, I always recommend people should invest based on their knowledge, based on the work that they've actually put into it, as opposed to just, reading a few things on Twitter. And don't worry, you'll be happy to know, Peter, that I might potentially sell some Bitcoin in order to buy my dream house someday. So I might take some profits off the table at that point.
Don't wait too long, though, because you may not be able to afford that dream house.
Peter, it's always great to talk to you. Thank you so much. I'll have all the links in the show notes.
Great, Natalie. Take care.
Thank you so much for checking out this episode of Coin Stories. If you're listening on the Fountain app, you can show your support and share your thoughts by sending a boost. Last month's top episode on Fountain was with Michael Saylor, and I had @JoeMartinMusic boost 1,000 sats to say, sounds like Saylor is describing Nostr when talking about identity. Is he purple-pilled yet? Well, if you're asking if he's on Nostr, yes, he is, @Saylor. I love reading and replying to your boosts. So download Fountain on iOS or Android today and make sure you subscribe to Coin Stories. This show is for entertainment and educational purposes only. Nothing should constitute as official investment advice, and you should always do your own research. My inbox is open if you want to share feedback or guest suggestions. Just reach out at Natalie@talkingbitcoin.com. I'll see you next time.